Hey, John Wraith, take a lap on half-hearted, if you would. What did you mean by half-hearted in your research note?
Well, specifically, we were talking actually about the market's perception around the Bank of England and do they really mean it when they sort of start moving or leaning towards a hike, both in terms of the overall vote and some of the rhetoric. And although clearly very short-end rates have moved higher because that was a sort of mechanical thing to happen, when you look at the currency, particularly on a trade-weighted basis, it's clearly true that sterling has strengthened against the US dollar. But when you look at it on a trade-weighted basis, it's at the same level it was just prior, pretty much, to the MPC meeting that triggered this hawkish move. When you look at forward-dated yields in the market or expectations of how the curve is going to evolve, it suggests to us that the market doesn't really believe that they mean it. Or possibly that if they do get to the point of raising rates, they might get away with one hike, but that will be it. This isn't the start of a cycle, and therefore it's the sort of intention to tighten monetary policy that seems pretty half-hearted.
But why are they, John, itching to hike? Are they? And actually, if you look at our chart, which thank you very much, Dan Tillis, for making this for us, it's basically a way of looking, it's the 3-month sterling interest rate futures contract, which is a way of looking at bets on the BOE.
Well, one interesting thing here is that you see the rate coming down for most of this year until, as we've been talking about, this sudden spike from mid-June on this swing in the rhetoric. Interestingly, as you can now see, it's come halfway back again, and that's where we'd sort of say that there's a half-hearted attitude in the markets. I think the Bank of England would like the markets to believe, and for that matter borrowers, that it is possible that rates may need to go up. They don't want the market assuming that rates won't go up this side of Brexit, for example, and they're worried about consumer debt levels building up excessively and so on. So they're keeping the market on alert. They're probably trying to slow the previous decline in sterling because they don't want another leg higher in inflation. But as to whether there's an actual case for raising rates, we'd say there really isn't at the moment.